first radio.
Rather like it's my first radio, that's the embarrassing piece. Well, turkey season's gonna start in about 30 days, mid-April. So we'll go shoot a turkey or two.
Get over the boat, go fishing.
We'll go fishing. I was gonna say, October, I try to get.
Fishing and flies?
So we'll do some of that.
I just want to
We'll
get close to the
take a
door.
little bit. It's always fun. You know, she had a UTI, so she wasn't feeling good, so.
How you doing, sir?
All right, how you doing?
Last
I'm
week.
doing.
All right.
I just said, Mom, just wait. So I think she's gonna move her stuff in this week, and she feels like she moved herself over. So she's got a place over in Long now. She's gonna have to move that over to her own work, so she'll be in good shape. But we just said, I don't think it's a good idea that we go and go like that.
Dude.
It's just not.
They can be tricky.
Well, yeah, it's. She seems to be getting more frequency.
Well,
Hey, what's going on? All right.
you missed,
Hey, how you doing, man? Hey, boy.
It's Josiah classmate. Oh, she came out before you.
All right, how you doing? You came out. She came out. Oh, you behind me.
Steve too.
Oh, yeah.
Okay.
Me and Steve grew up together.
Okay.
No, Josie was in my class, but he won't. Josie was in.
Yeah, that's what I thought. They were like
Yeah,
a year apart.
yeah. He was behind her,
Okay.
but she was in the class with me.
Southwest.
81 class with me.
but she's no 18 years old.
That's exactly right. That's exactly right. That's.
Next to TJ's on it. That's something. Huh? Yeah. Obviously. Do what?
Hey, man, how you doing? Good to see you, man. Man, I hadn't seen him in a long time. Appreciate it.
This meeting is designed as a work session for city council members to receive, review, and discuss information prepared by staff. Only staff and council members are allowed to speak on this meeting without special permission. At this time, I will ask our city manager to proceed with the business at hand.
Thank you, Mr. Mayor Pro Tem. Good morning, everyone.
Morning.
Today, I want to just give an overview of the retreat agenda for this morning. It's largely going to be about finances. We'll start with the audit presentation from Marlon Jenkins, followed by lunch, and then the afternoon session will feature representatives from the Local Government Commission as well as North Carolina League of Municipalities. And then at the end, we will wrap up with the legislative update. Does any member of council have any questions regarding such? If not, we'll go ahead and proceed. We'll start with Mr. Tim Lyons, who is a partner with Marlon Jenkins, and he'll present the fiscal year 25 audit.
They just got passed out, I think.
Good morning, I appreciate y'all having me here this morning. As Elton mentioned, I'm gonna go over and present the draft results of the city's June 30, 2025 fiscal year ended audit. What you have in front of you, the hard document that was just circulated, we kind of refer to as our auditor's discussion analysis. This is gonna give a kind of an overview of the audit. It talks about the reports that we will be issuing and go over just some of the more important information from the audit, some high-level financial information, and some other things, including some of the audit findings and recommendations that we have. Certainly, as I go through this, if y'all have any questions or if anything is needed from me, feel free to stop me, and then I've got a slot at the end for questions. But like I said, if there's anything as I'm going through it, feel free to let me know. If you look at page 2 of that document, the top where it says Malden and Jenkins by the numbers, the bottom kind of the more important thing there would be your engagement team leaders. Just want to, as Elton did, reintroduce myself. Tim Lyons, I'm the engagement partner. Last year you all had to kind of bear with me a little bit as I presented the audit over Zoom as I was recovering from a torn Achilles injury. So I appreciate that. But as the lead partner, I'm responsible for supervising our team, for ultimately reviewing and accepting responsibility for the work that my team has done. And then I also want to point out we have 2 other partners who have been involved with this audit, including a quality control partner who, once we are done, we're currently working with city staff right now to kind of finish drafting the various pieces of the ACFR, the annual comprehensive financial report, to put that full document together. Once we have that, we will proceed with the final QC review, which every single one of our governmental audits has to go through a final QC review. It's another partner who is not at all associated with the engagement, who will review the file and the financial statements to make sure that myself and everybody else on the team has done everything we needed to issue our opinion. Skipping over to page 4, the top says Independent Auditor's Report. First and foremost, as it says there in the opinions paragraph in the middle there, we anticipate issuing unmodified or clean opinions on the financial statements. So what that means is that when we have a final act for the numbers.
Where are the reports that we can pass out?
You got it right there.
This is, okay. All right.
Should everyone have one?
Nobody from the public.
Thank you, sorry about that.
Yeah, no worries. So page 4 there, we will be issuing an unmodified opinion on the city's financial statements. This page here kind of just reminds everybody what our report says and what it doesn't say, excuse me. As a reminder, the financial statements are the responsibilities of the city's management. Even though we are engaged to assist in the preparation of those financial statements, ultimately they are the responsibility of the city and the city's management, and our responsibility is to express an opinion on them. And we will be doing so when we get ready to publish our final report. Yes, sir.
Are you gonna have a you have a presentation behind you that we're gonna go through so the public can see it as well, or?
No, this is what I was gonna be presenting from.
Okay.
Excuse me, Mayor. But once it's published, it goes online. How is it offered to the public?
The city's accurate, like the actual final audit document? Yeah, no, that'll get published. Yeah, there's a part of the city's website. Yeah, and certainly, I mean, once we get done, I can update this to kind of talk about the fact that the audit is completed, and we've done all that, and y'all can publish this too. We've got a lot of our clients that publish this as well. On pages 5 and 6, I did just want to talk briefly. The city does prepare an ACFR, an annual comprehensive financial report. An ACFR does go above and beyond the minimum reporting requirements. And typically when an ACFR is prepared, the ACFR is submitted to the Government Finance Officers Association, the GFOA, and included within the ACFR is the certificate of achievement that you all are probably used to seeing with regard to financial reporting. One thing we did note in working with the city staff through the audit, the prior year ACFR, just with all the turnover and things that were happening, the prior year ACFR was not submitted to GFOA. And so I believe city staff are working on trying to potentially do that and get 24 submitted and 25 submitted at the same time. And so if you do get the city act, if you get the ACFR, the final document, if you're somebody who kind of compares page to page, you will not see that certificate that you're used to seeing in there in the past. But it's just because of the timing difference of when that was submitted to GFOA. Hopefully that'll be rectified with the issuance of the subsequent audit. Starting on page 7, we have kind of an overview of the financial statements. And so in this overview document, we have the order in which the financial statements flow when you open up the city's ACFR. We start with the government-wide financial statements, and then we move into the fund financial statements and the footnotes. Down at the bottom there, government-wide full accrual financial statements, draft information. The full accrual, the government-wide statements, not quite as important to the readers, so don't have a ton of information on there, just some high-level numbers of what will be in that final document when the final audit is officially issued. But starting over on page 8, and for the next several pages, we've got some more detailed information regarding the city's general funds and main operating funds. The chart on page 8 begins by showing the relationship to general fund revenues and other inflows to expenditures and other outflows of resources for the last 6 fiscal years.
A digital copy of this, is available, correct? Is there any way for the people that came out that we could actually put the digital copy of it? Have someone.
I'm not sure that would be a question for.
Council member, I can look at my email and email it to staff, and then he may be able to pull it up from his email account. So just give me a couple minutes.
Would y'all like me to keep going? Okay. So in that chart on page 8, we can see that for fiscal years 20 through 2023, the relationship between revenues and expenditures in the general fund were fairly consistent, with the general fund sort of barely breaking even each year, which is pretty consistent with what we typically see with other governmental entities. And then beginning in 2024, there's a pretty noticeable shift where expenditures and other financing uses began to significantly outpace revenues and other financing sources. And so what you will see if you go over to the next page, which sort of summarizes in a chart form this net change in fund balance. As we can see, 22 and 23, the general fund showing positive or increases in fund balance for those 4 fiscal years. And then for 2024 and 2025, significant reductions in fund balance through the operations of the city's general fund. For the fiscal year ended June 30, 2025, the general fund's total revenues were approximately $82.8 million, which was slightly less than the final budgeted amount, but The variance was about 2% between final budgeted revenues and actual revenues. On the expenditure side, general fund total expenditures were approximately 123.1 million, which exceeded final amended general fund budgets by 13.1 million, or about 12%.
Oh, could you, tell us the variance that drove those, the drivers behind the expense?
The largest, probably the largest individual item in the general fund for 2025 was the write-off was the write-off of the receivable balance. There was a long-term receivable balance on the books related to the transaction, the new market tax credit transaction between the general fund, the Public Facilities Corporation, and the construction of this facility. And there was a long-term receivable that had been carried on the general fund's books for, since this transaction began several years ago. And because of the timing of that transaction and the unwinding of that, the tax credits and the debt that was issued and all the things that went on with the financial institutions involved, that timing, that long-term receivable needed to be written off in 2025, and it was not budgeted for.
You can share the amount.
I want to say it was, I don't have the exact number in front of me. I can look it up in the draft on my phone. I was somewhere between 16 and 17 million.
And ma'am, make a statement. It was unbudgeted, but it was understood. That's the issue of whoever was doing fiscal administration. Because I think we need to clarify, that's a normal new market tax credit process.
The operation of the tax credit, but still would like to see that reflected in the budget.
And that's what I'm saying.
Okay.
The administration did not factor that into place. But it was factored on the front end. Documents were signed, communication was had, and it was very clear what the process was in every financial issue.
I have a question, city manager. You really want city manager the next time. It's not our first, the market tax credit project. I think we did the Douglas Law, the Cure Center. And typically that's understood in the budgeting process and when the unwinding of those projects come. So that, like Ruben just stated, that would be a staff decision to make sure that that is in the budget. To make sure that those, when it come to, the unwinding of the tax credits, that is appropriately, put in the budget for that particular project, correct?
Correct. You know, I was not employed during that time, but that is a standard practice, and that would typically be handled within the finance department.
So we don't want to seem like that it was a surprise and that this caused this big deficit to happen. It was already understood.
Mr. Lyon, when the June 24th comprehensive audit report was finalized, did Morgan and Jenkins give any considerations to give council advance notice of this future transaction? And was it disclosed in the June 30th, 2024?
Yes, sir. It was disclosed as a subsequent event in the prior year financial statements.
Well, I totally overlooked it, but we got the June 24 audit report in May of 25.
Yes, sir.
And we were busy working on the next year's budget.
I understand.
Okay, so it was in there,
Yes, sir.
and I completely overlooked it. Thank you for the clarification.
The last chart that I have, last page that I have regarding the general fund is on page 10. And in this chart here, we sort of refer to this chart as general fund leverage. As you know, as all of you know, the city's expenses and expenditures tend to be fairly consistent over all 12 months, but government revenues don't come in that in that same way, right? There's a lot of revenues that come in at certain times of the year, property taxes being the primary example that come in a very short period of time that are meant to fund a long period of operations. So this chart, we typically look at this because we want to pay attention to the relationship between expenditures and fund balance. And what you really want to be paying attention to is anytime these two lines start to grow significantly apart. Because what that means is that the city is not able to fund operations when these two numbers grow apart. They're not able to withstand any sort of shocks or changes in the timing of revenue collections. And unfortunately, as we can see for both 2024 and 2025, these two lines grow significantly apart as expenditures grow and fund balance get consumed. So that when you look down at the ratios at the bottom of the chart, this is the ratio of unassigned fund balance. Unassigned fund balance is that fund balance that is available for spending for future initiatives or at the government's discretion. And that available fund balance beginning in 2021 beginning in 2023, which was at 21%, which was still in excess of the city's minimum fund balance policy, has dropped down significantly in the last 2 years. When we completed the 2024 audit, we had a comment in the management letter regarding minimum fund balance. And to your point about the audit not being completed until May, certainly doesn't give you a lot of time to make decisions with one more month left in the fiscal year. But a trend that began in 2023, we're seeing where we are now at the end of 2025.
Question regarding page 9. The report indicates that the revenue came in approximately 2% below projection.
Or two.
The report indicates that the revenue came in approximately 2% below projections. What revenue sources declined?
Well, it's not a decline from 24 to 25. We're talking about the final budget for 25 compared to final numbers. So I don't have the numbers just to compare like what declined from 24. I think the biggest variance there was in investment income.
Okay, I'm talking about the 2% in revenue decline that you're showing on page 9. I want to know what was the drivers that produced that decline in the fund balance.
Sure.
Fund balance.
So in the draft report that we have, the largest variance between final budgeted number and actual number, the largest variance was in investment income and in miscellaneous income. Those were the two largest drivers. Property tax revenues, or I guess I should say tax revenues in general, were still roughly $2 million in excess of budget. And then the rest of the categories there were fairly in line with the rest of the budget. So the largest drivers of the variance from final budget were in investment income and miscellaneous.
And Councilmember Robinson, I would add to that, that's because the city wasn't aware of the cash balance in the investment accounts. So that's why those projections were off.
Mayor Pro Tem, our virtual public watching virtually, they don't have any audio right now. Is it appropriate to recess until it's good enough? Okay, thank you.
So now, beginning on page 11, in the document, we have draft information regarding the city's enterprise funds. And what the charts on the next 2 pages will sort of demonstrate is that the trend that we've seen in the city's general fund has largely been mirrored in the city's enterprise funds as well for the last 5 fiscal years. As you can see on this first chart on page 11, each of the city's enterprise funds, and just by way of reminder, we're talking about the electric, gas, water, sewer, and stormwater management funds. Each of those funds in 2021 showed if not an increase in net position, just a slight decrease in net position, which sometimes when you're looking at these on a full accrual basis of accounting is not, it's not unheard of because you have depreciation on the assets there. So sometimes you can have that non-cash expense sort of bringing your change in net position down. But starting in 2022 and kind of moving through the next 4 years, pretty significant decreases in that position each year. Furthermore, when you look at the chart at the top of page 11, excuse me, page 12, this is the unrestricted net position by fund. So in each of these funds, you have a significant component of your net position that is tied up in the investment in your infrastructure, in your capital assets that are needed and necessary to deliver services to those who are using those utility services. Unrestricted net position is sort of what's left over that is available for spending, that is available to be reinvested in the system, that is available to fund operations. And each year, each of the funds has consistently shown a decline in unrestricted net position for the last 4 to 5 years.
Are these declines in our enterprise fund, are they primarily due to operating losses, transfers to general funds, or insufficient rates?
So I don't know that, I can answer that question definitively. What I can say is that it's not due to transfers to the general fund. It would probably be a combination of operations and rates would be my guess. The only fund that shows consistently a transfer to the general fund is the electric fund every year.
So I'm talking about the whole enterprise funds, what I'm saying, I'm talking about electric, gas, water, sewer.
So the utility service fee or admin service fee does not impact if.
Are you talking about where the funds pay back the general fund?
Correct.
Yes, no, that's reported as an operating expense.
So in 2014, approximately, and this is not all, I'm getting this from information I've derived previously over the years, was about $12.5 million. And as of 2025, it's roughly $34.3 million. So a 259% increase coming from all the enterprise funds. Would that account for the decrease in the net position?
I can't say that it would account for all of it, but it certainly probably is a factor in it.
Okay, well, that's a large transfer. I call it a transfer. And by the way, Mr. Mayor, I've requested last year, and I've requested again, in the budget and then in this, it's called two different things. Here it's, well, we got one's called utility service charge, and the other one's an admin service charge. And I want, moving forward, both to be called the same thing, so there's no confusion with the council, mayor, and the public with this charge, because it's a significant impact both on the enterprise and then on the general fund. So can we make that happen, please?
Duly noted.
Thank you. But I did ask for it last year. And Councilman Robertson did ask the question, but you don't know exactly what the impact, whether it was cost of service or increase in expenses. The same thing, but on the utility charges.
Yeah, I mean, I think typically when you see this kind of a trend in utility funds, you kind of, all options are on the table in terms of looking at like, are the revenues and the rates too low? Are the expenses too high? And trying to figure that out. I sort of fixated on the interfund transfers or transfers to the general fund. I forgot that there's the admin charge is what we're talking about. When we think of transfers are something different. We call them something else in the financial statements. The amount for which the enterprise funds are reimbursing the general fund is included in the operating expenses. So to the extent that that could be having an impact as well, I think it's something that probably needs to be looked at.
Okay. And do you know from the utility service fee, in addition to whatever you call the admin service charge, is that a fair transfer from the enterprise funds to the general fund? For what is being charged to the enterprise fund?
So I don't know that I can make a qualitative statement about the amount. Sorry, there's a flat.
Would you say a 260% increase from 2014 to 2025 is reasonable?
It's a big number. Over the last 10 years, there have been a lot of things that have increased significantly from just the inflationary pressures from 3 or 4 years ago and the cost. I mean, we know we work with a lot of utility systems and the cost to operate these systems has increased significantly. The required contributions to pensions and those types of things, without doing a real detailed dive into what exactly led to the 260% increase. I don't know that I can say whether that's reasonable or not. It's a big number, certainly, and I would expect it to go or to trend upward. But, without really doing a detailed look into, what the base is and how we maybe we're applying that over the last 10 years, it'd be hard for me to say one way or another whether that's reasonable.
Okay, thank you.
So, yeah, so my question to you is, I think maybe we need to establish what this audit can and cannot answer.
Sure.
And what's your function today to do? Maybe everybody needs to reorient ourselves around what this audit report does.
Sure.
And the areas of conversation about variances and what's customary standard is a comparison of year to year to year to year. And what takes place during that year, you're just giving us data that you compiled from reports that have been created by staff. Am I incorrect?
Well, so the purpose of our audit is our audit is on the city's financial statements for the fiscal year ended June 30, 2025. So we're auditing those financial statements and we are opining on the numbers that will be in that final document, whether or not they are materially correct as presented. I think I would explain it by saying that we're sort of giving an opinion on the what. We're giving an opinion on what's there, but we're not getting into the why or the how. So that's the focus of our audit.
And we're not saying that's an illegitimate discussion, just not one that we can answer.
That's correct. Now, I mean, I'm happy to field the questions, but I'll do my best to answer them, but there's probably gonna be a lot like that one that I'm not in a position to answer.
Do you audit other municipalities that have the utilities, enterprise funds, similar size to Rocky Mount? And
Yes,
have you seen, increases of 260%, of these funds, $34.3 million in service fees?
Off the top of my head, I don't know. I mean, certainly, as I mentioned, we have seen generally an increase, especially in the last 4 to 5 years, in the costs related to operating utilities. But as far as specific percentages and dollar amounts, I don't have that information in mind.
So 260% doesn't stick out to you? It's been abnormal?
Well, as like I was saying earlier, that certainly is a large number. And I don't know how, again, without looking into details of what all is in there, being able to quantify it and look at what comprises the amounts that we're charging back to the general fund and the general fund is charging to the utilities funds. I mean, it's a large number, obviously, but 11 years is a long time. We've seen costs increase significantly in certain things. So yeah, I wish I could help more with that, but I don't have that in front of me. So moving forward on pages 13 and 14, what I have here is just a kind of a brief summary of the footnotes that are in the city's annual comprehensive financial report in the city's ACFR. We put this in here just to sort of help with, if there's a specific footnote that you've got a particular question or concern or issue, that you can kind of go right to that footnote. I mean, we know these ACFRs, they're large documents, 300 pages. It's a lot to take in and to digest, but the footnote kind of roadmap, if you will. So that's really all that is in there, is just by way of information. And then on page 15, just a quick summary that in addition to our opinion on the financial statements, which is the auditor's report at the front of the document, we will also be issuing 3 additional reports that are in the back part of the document that relate to our work in accordance with government auditing standards and in accordance with the single audit requirements. So those 3 additional reports are our Yellow Book report, which is our report on compliance and internal controls of our financial reporting, and then our 2 reports in accordance with the Federal Uniform Guidance and the State of North Carolina Single Audit Implementation Act. Starting on page 16, And what goes kind of page 16 through 19 is what is referred to as our required communications. These are the communications that the audit standards require that I submit to you all in writing at the conclusion of our audit. And so this document sort of does that. I'm not going to go through here and certainly read each one of them, but just figured I would hit the highlights of the ones that I think are particularly important. At the bottom of page 16 is we've sort of been discussing already. Yes, sir.
Excuse me, but we were previously given a draft copy. And this morning, a revised, updated copy. Any changes? I've had a chance to go through the draft copy. Any changes in the document given us today?
No, sir.
Okay, good. Regarding internal controls.
Yes, sir.
If you recall last year, I discussed this topic. You look at internal controls regarding laws and regulations. And I asked, when do you get concerned about internal controls regarding established policies and procedures?
So I guess I would answer that by saying we get concerned when we see impacts in the financial statements.
Impacts in financial statements.
Yes, sir.
I believe when the 24 audit was starting to be done, and the most recent 25 audit, bank statements had not been reconciled. Is that correct?
Yeah, I believe through the course of the closeout procedures, there was a significant amount of work that was being done to get caught up.
Is that a concern of the outside audit firm?
Yes, sir.
You know, I haven't gone through your draft. I have briefly. I don't recall again, if I overlooked it, please explain. But did you express a concern in the presentation of the 24 audit and the soon to be completed 25 audit about this particular situation?
Yes, sir. I believe in the 24 audit, we had a finding regarding general year-end financial close, and I believe that was addressed in there.
But did it specifically mention bank statements not being accurately performed?
Without going back to look, I don't know, but typically if bank reconciliations are not being done timely, that is addressed in our findings.
With specific wording or just general wording?
I mean, typically we would just mention the fact that bank reconciliations were not being done, and because of that, there were material audit adjustments that were required to get things fixed.
Thank you.
In our required communications, bottom of page 16 regarding accounting policies, I think that one, and then when you combine that with the one at the top of page 17 regarding judgments and accounting estimates, there's obviously a lot that goes into compiling an ACFR. There's a lot that goes into creating financial statements in accordance with generally accepted accounting principles. And so we do look at policies and the estimates and the way in which the city is evaluating and estimating certain things to make sure that there are not significant inconsistencies with other municipalities, other governments in the state of North Carolina, other entities that operate utility systems. So we look at those and consider the qualitative aspects of the city's accounting beyond just the quantitative. I do think it's important on the middle part of page 17 for the auditor to specifically address our relationship with management during the conduct of the audit. And we appreciate that everything that Cheryl and her team, Elton, that you all have done. Not only is the conduct of an audit now a significant undertaking just in terms of the amount of information that we need and the number of people we need to speak to, but certainly there are other circumstances going on here at Rocky Mountain, and we appreciate the help of everybody working with us to get the audit completed as timely as we can. On the middle of page 18, we have a paragraph regarding audit adjustments. And you'll note in this presentation that I'm giving today, for those of you in the room with hard copies, we have our report ends on page 29 and a copy of all of the adjustments that have been posted since the beginning of field work, since the import of the city's trial balances, is included for your reference. Beginning on page 20, we have accounting recommendations and related matters. These three items are the items that we would consider to be, or that we will be reporting in our report in accordance with government auditing standards as findings, as material weaknesses in the city's internal controls for fiscal year June 30, 2025. The first one relates to the city's financial condition. For the year ended June 30, 2025, the city exhibits multiple indicators of a deteriorating financial condition, including many of the things that we have already discussed this morning regarding fund balance in the general fund, operating deficits in the general fund and the enterprise funds, and other conditions that reflect inadequate financial oversight, insufficient budget monitoring, and a lack of proactive corrective action. That will be in our report as finding 2025-001. The next, yes, sir.
Again, I just want the clarification, understanding for me. Your statement, these conditions reflect inadequate financial oversight. Just stop there. Is that referencing perhaps balancing of statements time?
As it relates to this finding, that's not what we're talking about. I mean, you could certainly, and to be clear, this is not the entire text of the finding.
Okay.
So that
But
could,
that is one part of the financial.
yes, and these findings that will be published have all sorts of, there's a criteria, a context, a cause, and those types of things. Not lack of timely preparation of financial records, including bank reconciliations, is certainly a part of that.
Thank you, Mr. Lyons.
I have a question. Regarding the, next line in the capital assets. The audit, requires approximately $32 million in correction related to capital assets and leases. What weaknesses in the city accounting controls cause these adjustments?
Sure. So, the first finding there, the financial condition finding, is more just a kind of an overall, some issues that we're dealing with. The other two findings, not to minimize them, but in order for us to maintain our independence, when we're going through the audit, if we find things that have to be adjusted or corrected in order to get the numbers to be corrected in the financial statements, if those adjustments happen to be over our materiality thresholds, we're sort of in a little bit of a, we don't get a lot of say in that. We kind of like, it's how government auditing standards, the way that they define what material weaknesses. And because the material errors were not either detected and corrected by management, they got to the auditor and we had to fix them. That's when it kind of trips over into this realm of being a finding. Otherwise, we would be playing a role with city management in adjusting numbers and then opining on them. So the important thing to note here is that these two findings just relate to adjustments that have occurred during the audit. The numbers that you see in the final financial statements are reflective of these adjustments. So I just wanted to kind of make that clear for everybody in the room that that's what we're talking about here in finding 2 and 3, that these are items that had to get fixed during the conduct of the audit. So with regard to the capital asset, the biggest issue was items that should have been capitalized or should have been picked up as capital assets that were just not.
Such as,
I'm sorry.
what are those items?
I mean, there were significant equipment and vehicle purchases were the kind of the more common things that were just as expense. They were carried as expenses in the income statement as opposed to being picked up and recorded on the balance sheet as a capital asset.
Was that an issue last year?
Yes.
And so you're listing this again?
Yes,
Okay, same for number 3?
that's correct. Yes.
Okay.
And I think it is fair to point out too, I'm sorry, I'll go ahead.
I was gonna say it's noted in here that was a repeat finding. And so I will state that those items were corrected. But if you recall, the city didn't have a finance director for 11 months out of the 12 months that this audit was supposed to be reviewing. And so since I was hired, since I've been turned hired Cheryl, these items were corrected and notified.
And so moving forward, we won't have this finding moving forward.
That is our goal.
Right. Well, and I would agree that, our finances, the head of finance is a lot better than what we.
To put it in perspective, Councilmember Doddridge, in the previous fiscal year, if I recall, there were about 7 or 8 findings, and this year we got it down to 3, and those 2 were already corrected. And the first one is based on the financial position, which we'll have to make difficult decisions in the future to correct that situation. But everything is trending in the right direction currently.
Can you talk about the 6.9 million in your finding, number 3, and expenditures, account payables, 6.9 million?
Yeah, so, that's one of the, kind of the strange things about conducting an audit as of a point in time. We're stopping at June the 30th, but certainly the city's operations don't stop. And so things that kind of cross over fiscal years, we have to make sure that they get put into the right accounting period. And the bulk of that adjustment relates to approved payroll, the pay period that lapses between June and then goes into July. There was an error in how that was calculated, and what part pertained to June and what part pertained to July. So we had to post an adjustment to fix that. And then were some other miscellaneous payable items that should have been picked up as AP as of June the 30th, but were not. The checks were written in July. Does not affect cash flows, doesn't even affect the timing of cash flows. It truly just reflects the timing of when the expenditures or expenses have to be picked up and recognized as a liability.
I'd like to make one comment about that, and part of that is due to the reconciliation as well, that when we started this, I think it's been noted that we were 13 months behind, but as of today, we're fully within the 30-day period of being reconciled.
And while we're discussing, the move to the change that you made in finance director or hiring a finance director, things have been improving in that department dramatically, and thank you for that. I guess I don't know whether to direct this to me, Mr. Lyons, or to you, Mr. Manager, but can y'all, talk about the timeliness of this? This was delayed. But we also had, it's my understanding the state required, or I don't know if it was the state or the federal government required, or gave a, extension of reporting or something. And then I just want to make sure, and I think I know the answer, that we responded in a timely manner. You didn't receive any information late from the city of Rocky Mount, based on the criteria that was, given to us. Is that an accurate statement?
So
I'll start. Well, you can tell we've been working around the clock on this since this process started. I will say there were a few items that we were still working on at the last minute, and I think that's tied to fixed assets. Tim and Cheryl, who's here, can attest to that. With regard to the deadline that I think you're referring to, initially, the deadline was just changed from October 31st until December 31st. And then due to things that occurred at the federal level, the deadline to submit the audit was moved to February 12th. And so the city signed the extension to make sure that we met that deadline. But being that the city had multiple audits going on from a third party, the state office of state auditors was here, they're still here. Their report was made public today. A combination of a number of things is why we stand here today. But for the most part, outside of the fixed assets, everything was turned in prior to the deadline.
Yeah, no, I helped summarize that great. There was a significant hiccup for all audits this year in the fall. The federal government normally releases a document referred to as a compliance supplement.
Right.
It's this big giant PDF document that we as the auditors have to use in auditing federal program. That tells us for every federal program, if we have to audit a grant from the DOT or the Department of Education or the Department of Energy, like it tells us what we have to test.
Right.
That document normally comes out in May or June and did not come out until the week before Thanksgiving.
Right. Well, I asked the question mainly for public edification, especially in light of everything that's happening today. And so again, Mr. Manager, I applaud you and Ms. Spivey, I applaud you for vast improvements of where we have been. Thank you.
I think the other thing I would point out too, just real quick, I'm sorry, but I mean, when you get behind on your audits, it's a bit like quicksand. like the harder and harder you fight to get out of it, the harder and harder it is to get out of it. And so usually when you miss an audit, and as late as last year's audit was, it typically takes a couple of audit cycles to get fully caught up. So, I mean, I think that's a very, unfortunately, just because of how involved they are, how much information we need, how large these documents are, and the fact that, just because we're there working on an audit, Cheryl's job doesn't stop. She still has things that she's got to do day to day. So it is not uncommon to see it take a couple of audit cycles for a government to get caught back up after being as late as things were.
Yeah, I think it's, not to toot our own horn, but it's pretty impressive to be where we are today. But I don't want to just take credit with Cheryl and I. It was a team effort because all of the departments are involved in the audit process as far as submitting things to us in a timely fashion, meeting our deadlines, as well as the city council up there giving me the flexibility to do what I need to do from an organization structure standpoint. So while Cheryl and I, submitted the documents, it definitely was a team effort across the board.
Were there any other questions about the findings?
I just wanted to say that, it's good that some of us are asking questions now. But we all know, and so does the public, when this occurred and what watch it occurred under. Those questions should have been asked of the previous city manager and of, city manager Peter Varney. Those questions should have been asked to the assistant to the city manager for budget evaluation. We know what state we were in. We knew that we didn't have a qualified finance director that was overpaid from $60,000 to $170,000. And so this was stated in the public square at council meetings, committee of the holes, in the minutes. It was 536 pages. State auditor just released this report, the same thing that some of us have been saying. We know that when Elton took the wheel, that he hired Cheryl, which have helped us tremendously to get back on track, and so has he and the staff. So it was under this watch of all of us who now are drilling you, and when we're sitting at the dais watching this happen, not questioning the managers, Keith Rogers, Peter Varney, the assistant to the city manager for budget evaluation. No, that we were not reconciled. Cheryl told us when she first got here, we was 13 months behind and we were caught up. So if we're asking these questions just to make it seem like we are just so, what was happening. To me, let the gentleman get through the presentation. Charles, I realized that you were not here, but you was part of the public square with the citizens who were coming to the council meeting. And so I just wanted to just put that out there, that these questions of all of this stuff that you're pointing out should have been addressed during those times. Thank you.
Questions have been asked publicly and in private, and not everybody tends to, a lot of things can be done behind the scenes as opposed to in public. I'll leave it at that. Thank you.
The remainder of the information that I have in this document in front of you is more stuff that I'm just sort of delivering to you by way of information. There's some stuff in there regarding future accounting standards and things that will be required to be implemented in the city's ACFR in future fiscal periods, as well as a reminder about our free quarterly continuing education for clients. I'm happy to take any additional questions that folks may have for me this morning.
I have questions regarding the bad debt. I think we have journal entries include $16.6 million of bad debt write-off
That's the write-off for that I mentioned earlier.
for the event center.
Yes, sir.
So that's considered bad debt.
Well, it's, the GL account is set up to be captured in that way, but yes, it's an uncollectible receivable.
And just to be clear, a big part of that was new credit, new market credits, you know, about 15 million of that. So when you're looking at write-offs, just take that into consideration. So that was really a balance sheet transaction, as I understand it, right? We were holding a receivable. We knew we were going to collect the receivable, but it paid the new market tax credits more. Right. We held that on the books for whatever period of time that was, 10, 15, 20 years. And then at the end of that period of time, you adjust off those accounts receivable. That's Ruben was saying, that's just what we know. So when you're looking at the bad debt, you're looking at the adjustments, that $15 million was always going to go away. We didn't capture that in our budget, which is a, you know, shame on us, and it is a problem. But that showed us the big movement in the numbers from 24 to 25. I think that's what we're saying. And so when you're looking at bad debt, you know, write-offs, it's probably the delta between roughly that $15 million and the 16, whatever.
And that's the process of new market tax credits. That's the only reason why banks and CDs and CDFIs would have invested with us to attract that additional multiple millions of dollars of their cash so that they can in turn receive a write-off on their investment. That's a standard process. It is probably 1,000 pages of documents and signings. The city's attorneys knew, the city management knew, the city council knew, the public knew, because we had tons of meetings. And so if it didn't make it to the budget, that's a staff issue. That's a staff issue. We won't create everything like it. But so that's a miss somebody made, and I'm thankful that we caught it. And that's just the process. So I think when we talk about that, you need to go back and talk about the whole new market tax credit process and make sure we're familiar with understanding how that works. But that's the rollout and online that takes place in every single new markets tax credit process across the United States. We did it for the Imperial Center first. We go to the Douglas Block second, and this was the city's third. And the new market tax credit investment created the opportunity for us to have the upgraded amenities that we all enjoy today. It paid for everything on this side. It paid for downstairs. It paid for upgraded bleachers or whatever. That's what it paid for. So we can't get something for nothing. That was the city's investment responsibility and the design transaction clarity that we move out. We just went booked. That's a staff issue. I'm responsible for creating the budget, but that's a staff issue. Somebody didn't know what they were doing or forgot or overlooked or was stressed out and just didn't think about it.
But the Catford write-off was the delta between whatever the new market credits were and that 16 million or whatever it was. Or failure to collect taxes or fines or whatever else.
Based on your experience auditing municipalities, what are the 3 most important steps Rocky Mount should take to restore financial stability?
Well, again, I mean, I feel my in-house counsel would like for me to remind everybody that that is not within the purview of my audit. So before I answer that question, but Joe, if you're watching, I said it. But just to remind you, I mean, that it's going to take a lot of probably hard decisions. Unfortunately, when we have seen this situation arise, governments get into financial messes, issues quickly, and it takes hard work to get out of them. But I think everything has to be on the table, and then unfortunately, that will be hard decisions for you all. But then I think from an accounting and financial reporting standpoint, having Cheryl here is really important, because having timely accounting, financial reconciliation, I mean, in order to make these decisions, you've got to know that you're looking at good numbers and you have good data. And so that's probably the only, if you hear me say nothing else, that would be the most important thing, is making sure that we're looking at good numbers and good data before we make decisions.
I'd like to remind everybody that we do have representation from the leading municipality and their finance arm, as well as local government commission that will be coming up next. So I think it may be appropriate to ask some of the questions we had at one time. Thank you.
Yes, sir.
Now, Mr. Lyons, we were given a preliminary draft of the year-end report.
Yes, sir.
And I know there's gonna be another presentation once it's been finalized, correct?
If you all would like me to come back and present when it's
Well-
final, that's fine. I'd be happy to.
I got a couple of questions regarding notes 3 and note 11.
Okay.
Note 3, accounts receivable and allowance for doubtful accounts. In reviewing some of my discussions with you last May, I brought up the planning loan balance of roughly, this is now $3,358,000. And I asked, were any of these loans not current?
Yes, sir.
And I asked, were any 180 days past due? Can you give us answers to the balances as of June 30th, 2025?
As it relates to those two specific questions,
Yes.
I cannot give you that answer this morning.
Mr. Manager, can we get such information, please? Because I think it's important for us to understand the value, make sure that we have proper evaluation of loans. Second question, business type activities. Electric, gas, water, sewer, stormwater. Total business type activities for allowance now for doubtful accounts continues to be the same, 2,551,000. Is that a concern?
It is not a concern. No, sir. Just real quick, regarding the planning loans, I think it's important to distinguish within that population of receivables, there are loans in there that have criteria to be met,
Mhm.
where the intention of the loan from the beginning was that the loan would be forgivable.
Right,
So-
I understand that.
Okay, so I just want to make sure. But then, as far as the business type activities, when we look at the allowance and we look at subsequent months and we look to make sure that what the city has said or what any government has said is our estimate for the portion of receivables that will not be collected. And we look at trend information, we look at inputs that go into that and we say, is this a reasonable estimate? Is it materially correct? So it's, that's a number where there's not going to be a specific number that we say our allowance should be this number to the penny. We're estimating what we think what we think that the ultimate amount of these receivable balances will be written off. And as long as we consider it to be materially correct, then we would move on.
Would it be useful for council to be given, I'm asking this of the manager, plus as we look at next year's budget, to give the historical trend of what actually write-offs have been for the last 3, 4, 5 years in each of the enterprise funds?
I mean, I think that probably could be helpful information.
Thank you. Last question is something is a typo, I believe.
Okay.
Note number 11, 1, 2, 3, 4, the fifth, long-term debt mentions equipment due in monthly installments of 95,355 maturing April 2025.
Yeah,
I think that's a typo.
I think it is too. I think I would also just sort of humbly ask that this document has not been through my processing or admin department yet. So anything like that would probably get picked up.
Well, it was same wording last year, final audit, so I didn't catch it myself.
Well, last year would have been April of 2025, would have been after June of 24. So it would have been correct last year,
But the full balance,
potentially.
okay.
Either way, we'll look at it. We'll make sure that the final document
I
is.
think it's got longer term maturity.
Do you help me understand, I should have done a better job of, maybe. For the revenue or the expenses, they're somewhat itemized out, well, in Parks and Rec, specifically talking about the event center and then the revenue, where's the revenue side of that as it relates to the event center? And then under the debt service, under principal and interest, what portion of that is related to the event center? Or where do I find it in here?
So the you're in the front where the general fund budget statement is.
Yes,
That's
sir.
a statement of revenue. So there is a detailed general fund budget schedule in the back, right behind the required supplementary information. That's probably not going to have the debt service numbers you're looking for, because we typically don't break down the debt service by individual debt item. We just show principal and interest as two distinct line items. But that would be where I would recommend starting for the event center.
Okay, maybe afterwards you can help me find it.
Okay.
And then, the variance on, community and business development, the police, environmental services, help me understand the large, variances there.
So the first one, the environmental service, I think I would say that right now, the write-off of the loan we were talking about earlier, the 17 million for the new market tax credit thing, that is sitting in environmental service right now, just based on how it's mapped. I was actually talking about that with Cheryl beforehand, so that probably needs to get fixed, just in terms of where it shows.
Thank you.
It's not an environmental service. It probably needs to needs to go into a different category. And Cheryl and I were talking about that earlier. So, but as far as the variances in the other two categories, without having my detailed trial balance in front of me, I don't know what specific accounts are driving the vast majority of those variances.
Okay, so, all right.
The detailed general fund budgetary schedule in the back may help with some of that. What was the first one? It was community.
I'm sorry, I turned the page. Community and business development, it's a go ahead and say $2.7 million variance to the. And it might be because there was the budget was, go ahead and say 2 million, and then the final was a negative 703,000. I'm assuming that had a big role in it. And then, the police, was right at $5 million variance to the negative. And, you've already answered the environmental service piece.
The public safety one looks like the vast majority of the variances between final budget and actual has to do with personnel cost.
It's funny when you're looking at this by yourself, you can get at things quickly, but when you're
Right.
in public, it's a little more difficult.
Yep.
Okay, well, are you leaving right after this meeting? I mean, right, you your the presentation?
Yeah, I can be available.
You'll stay for money, you know? Quick call.
Well, for the record, that's not true.
If that's not true, then please stay.
Well, I'll be at the fixed audit fee. Y'all have me here as long as you want me here.
How about for food?
When you did the
3 to 4 hour drive. I will say, he does have a drive, but then he has to go back to Columbia, South Carolina, so just keep that in mind.
Okay, we won't keep you too long. Or I'll try to find it now.
I have a question regarding the journal entry on page 9 and 12. The journal entry on page 9 and 12, it's a reclassification. And you have here false alarm. It's over $168,000. Can you help me with that false alarm? It's 00111-2005. The false alarm entry and also event center payroll accountant. On that page at 9 and 12.
Off the top of my head, I don't know exactly what that journal entry is doing. It appears to be mostly a balance sheet reclass, just moving things between accounts to get them in the right place for financial statement, like for mapping purposes, but I'm not sure.
How about with, on page 105, I see capital leases in the millions. What are those expenses, what are we using? So the millions of dollars journal entry adjusting.
What journal entry number is it?
That journal. It starts, adjusting journal entry JE number 2.
Okay. Yeah, so that entry was provided to show current year activity with regard to the long-term lease liabilities. So to record, the reduction in outstanding principal balances, to record the reduction in, the liability balances, and to reclass the current and non-current portions.
Each of those look like over $1 million. What are those expenses? What are we leasing?
What specifically is the city leasing?
Yeah, capital lease payment,
Yes.
1.2, another one 1.4, another one 1.1, another one 1.1.
Yes, the city has several outstanding leases for equipment and vehicles.
And Councilmember Robinson, you know, we do have the enterprise agreement, a lot of that capital equipment, well, actually, all of that is leased.
Yes.
That was 6.8.
I don't know the number off the top of my head, but I do know that it's, in the millions.
Mm-hmm.
We all know it was not good. Let's see.
So all of those would have fell in the 25 budget. These capital.
I think it's important to note here that this entry is not just current year activity, like not just current year payments. So we're reflecting several things here. We could be adjusting balances. We could be taking balances that are picked up down in the income statement and reclassing them to the balance sheet to show the reduction of the liability. Also to reclass was where we're required to show the amount that is due within 1 year versus the amount that's long-term. So some of that is just a reclass between two liability accounts. So this is not, you can't look at this and say we have $5.1 million of new leases in 25. You can't say that just based on these journal entries.
And additionally, until we, sell or get out of the lease, that's gonna be an ongoing expense. That's the definition of the lease, it's gonna carry over.
So I found the expenses and the revenues for the event center.
Okay.
And I don't know if this is, Mr. Manager, more of a question for you. And I asked this in our small group meeting last week. Here, it shows the revenue. Let me get back to it. Well, I read go ahead and say $2,200,000. And then, expenses of $3,863,000, so, a deficit of 1.7 million. I don't have the debt service, but it's approximately, I think, 3 million on that. Would you agree with that, Mr. Manager?
For the most part, I'm gonna let Cheryl handle the debt services
Right.
portion of it.
But really, my question is, with what was handed to the city council 3 weeks ago, in there, it said preliminary FY 25. And this doesn't have anything really to do with you, except where I'm concerned with the huge difference between what we have here and what we provided the other week. Revenues were 2.4 million based on what was given to us, and expenditures were 7.1 million. And then the debt service was 3 million. So, and I'm more asking this question with the issue we're in now of cash flow. Do we know why the difference between what was given to us several weeks ago to what we have here? And that's my concern about I know it's gonna be off because they're doing whatever adjustments they do behind the scenes. But it's a large, as the mayor likes to say, a large delta.
Doctor, I still need to reconcile the two now that we have both sides of this.
You, that's part of what I'm doing in my executive summary. So I can't answer that question
Sure.
today. I know you've been asking it, but, we'll have you that answer.
Okay, well, please do, because that is a, you know, we're obviously in a very tenuous cash flow issue right now, and there's a huge difference there, and so that's why I keep asking the question on that. So
Great. I
thank you.
appreciate it. Thank you.
And I appreciate you, and I recognize you are doing a lot, not only managing, but you're also doing the day-to-day, so I think we all recognize that and appreciate where you're coming from, so thank you.
Thank you.
I have a question. So what is the, we posed the same question about the Imperial Center. In manager, you at some point give us the same analysis. Just they're both city facilities
Yes.
and it's amenity to our citizens. And most, other than Durham and maybe someone else, somewhere else, you see that the DPAC making money. But if you look at some other cities, which they provide that type of service for their community, or not, but it's an amenity when people come to visit restaurants, eating beds, so forth and so on. So it'd be good to see the analysis of all our city facilities that we own. What is the expenditures? What is the revenue? So we can get a future issue.
So basically, like a profit loss summary for the city, facilities. Right, yeah, we can do that.
Thank you.
And I just want to also state for the record, it's not the evaluation of the success of a facility is not just based on did we make money off that facility. The real driver is in the revenue in the private sector. What the sales tax revenues look like. You cannot distinguish and differentiate the success of every hotel in Rocky Mount, every restaurant, from why they feel the way they feel. We knew that up front. We communicated that to the public. We did our best to create financials where SFO did for the event center. But nobody, many of the coaches, so you have over 3 years where we were still operating. And I really think this is not a conversation to deal with the audit, you know, I mean, in depth, I'm not saying we shouldn't have it. What I am saying is that, it looks like we need to have some Econ 101 about what drives revenue in the city. And if we're talking about where do we benefit, how do we recover out of the mess that we're in, then it's gonna be in revenue generation. That's just my perspective. It's not gonna be in, I don't know what we're headed to other than just operate that. You know, so I'm a little mystified about the conversation. Are we just talking about accuracy in reporting? Or are we talking about something that?
I want to be clear on what I asked. My question is more to cash. We're in a cash flow crisis, and if we don't know where all our cash is going, we can't correct the problem. In that, I'm not arguing why this was built, what it was here to generate. What I'm saying is there's a huge difference between what we have, what's being presented to us today, and to what was presented to us several weeks ago in a report that we received. It has everything to do with cash. I'm not going to argue. I spent three and a half years of my life arguing against this place. It's here. We got to make it work.
It is work.
It's a cash, and you understand that based off what was given us, if you got the debt service and you got the revenue, the expenses that exceed revenue, you're looking at about a $7.8 million cash coming out. I'm strictly talking about cash. Here, it reduces that to only about 4.7 million, and that's a huge differential, and that's why I'm asking the question. As for my education, I was an urban studies major and minored in econ. So I don't need Econ 101.
Well,
But I
I'm
do
saying
appreciate
this,
it.
I'm
Thank you
saying
very
this,
much.
if you're talking about cash, cash is what you got in the bank today.
And we have
And,
none.
and we don't have it, and that's because Econ went on it. When we should have had it. So what I'm saying to you, this is a document that ended fiscal year 2025-2026, and that's June 30. We know what cash we have today because somebody sat there and reconciled the whole first 3 months they were here. So what I'm saying, I don't have any issue about making sure the numbers are starting out right. But cash management is already in place, and we don't need this to tell us what we got now. This is a backwards look at where we started this fiscal year. We're almost at the end of another fiscal year. And the cash has been managed. It was not managed for 2.5 years, sir. So maybe we don't need to rehearse Econ 101, but it should have been put in place back then. I'm just saying, what are we gonna do with this report? Is it accurate or is it not? If it's accurate, then let's go ahead on so we can get to those discussions, sir. If it's not accurate, then when it's gonna be accurate, don't we have to adopt this soon? So it has to go forward?
And hence my question. Thank you.
And I want to mention, Cheryl just said she's gonna get the answer to you. But just for the sake of transparency, when some was at the helm of this, this should have been Econ 101 discussed then. And Ruben is exactly correct. You're looking at something in the rearview mirror. We moving forward. We got a good city manager. We got a good finance director. We got a good HR director, and so does the rest of this team. And we know what predicament that we were in when they started. When Cheryl started, when Elton started, when Lisa started. We had bad management in HR, bad management in the city management, and bad city in finance. And all this Econ 101 and transparency is too late for 2020, 2023, 2024, 2025. And then another thing I want to say, council not able to go to our past, type in, see what's in the DNC account, the investment account, and this account. There's only two people that you all told us, the city manager and who? Finance director.
Yeah, fine, just for clarity, I don't have access to the county, the finance department for checks and balance purpose, but I do get reports, and as soon as I get them, I give them to you all.
And what was stated, counts were not being checked. Book was not being balanced. We know this. So this is just a dog and pony show. Because we lied, and the auditor just gave us our finance, just gave us our report, everything that we have been saying. People not gonna believe that. So, let's move forward and see how we can, we're heading in the right direction. I think we're taking the right steps to get us there. We have a plan. We're implementing the plan. We're gonna have to be adjusted from time to time, and people know where we are. Because we've been talking about it. All this stuff, trying to figure out where it's coming from. Thank you.
Well, after lunch, I look forward, and hopefully everyone here looks forward to our discussion with the league as well as LGC and things they have to share with us. But the rubber hits the road in the morning when you start looking at council priorities for fiscal year 2027. And I hope that we will have a much longer budget review the discussion period that we have had in previous years. And I look forward to hearing from city management tomorrow on ways that they think we can, go forward. But we all got to, be cognizant, we need to work together so that we can make this city what we want it to be. And I think we all have that aspiration. Thank you.
Thank you. I know we're trying to finish up. There's great point, you made that as management. You operate based off of reports received from finance director. And so it's a possibility that our last administration, being that that was an inconsistent office operated off of budgeting as the council, as we did as a council, is that fair to assume? Well, I know.
What exactly?
I said, and I know the manager we had is not here to answer that question, but Councilman Knight brought up a great point about us, trying to move forward. My question is, with your response of not being able to have access to bank accounts, you just have reports from finance director. Is it safe to assume that, prior administration, operated off of budgeting reports? Is that, because I mean, without a finance department stable, I'm trying to figure out what that being some of our issue.
Well, what I would say is it's never safe to assume, number one.
Yeah.
And I don't want to speak about the past, but what I will state and what I have knowledge of is that the city actually did have a finance person in the role of interim finance director during that time, as well as budget staff. And so what I am aware of is that the management at the time, both the interim manager and the permanent manager that was here, they relied on the information that they received from the finance department. Now, whether that information was accurate or not, that's for, the reports to decide. But I do know it's kind of hard to have accurate information if accounts haven't been reconciled over a period of time, such as 13 to 18 months.
Appreciate it. Thanks for clearing that up. I was always under the impression that the manager had access, so I appreciate it. Thank you.
Yeah, no, well, it depends. I know I can't speak what the last manager had access to, but I do not have access to the accounts. Only a certain amount of people can get in and transfer funds. What I do is, my signature goes on the review of certain transfers. So I am aware of what goes on, but actually accessing our cash accounts, no, I do not have access and I don't want access.
I appreciate that. And one last thing since we're on that topic is it moving forward. I think through all of this, which unbeknownst to me, I didn't realize we had so many accounts moving forward in our financial statements. Will we be receiving reports from all of those accounts, or how will that process go?
Well, since Cheryl and I have been brought on, council has been receiving monthly accounts, monthly financial reports with all of our accounts, and we include the cash balances in those accounts. So typically, on a month-to-month basis, you will see what we are projecting from a budgetary standpoint, comparing current year to the past year, as well as our cash balances on, it's usually, we reconcile, so it's usually a month behind. And that does have our three major cash accounts: North Carolina Management Trust Fund, NC Class, as well as, I think it's PNC.
That's correct. That's that's our accounts that hold our unrestricted money. And we have other accounts that hold restricted money, for instance, primarily those where we borrow money. And those are held in a restricted account that can only be used for the purposes in which we borrowed the money. So that's, as far as the number of them, more of them are restricted than not. But the majority of the money is in large majority of the money is in the unrestricted account, which we report every month.
Thank you.
Are there any other questions for Tim?
What's our next step in this process?
With regard to the audit?
Yes.
Okay, so where we are right now is that, we're still working with Cheryl. I'm just getting a couple of last pieces for the annual comprehensive financial report. Mostly the kind of the introductory and the, management's discussion analysis, those types of documents. Once we get the whole thing put together, we will proceed with our final QC review, and then we'll proceed with issuance. We've been working together on having that completed this month. So there, the audit will be issued in March.
And then in turn, Councilmember Blackwell, we would then submit the final document to the local government commission.
One last question. In your management letter or executive letter, will there be anything different or included that was discussed today?
The only thing that would be different potentially, when we prepare the submission to the local government commission, that system does create what are known as financial performance indicators of concern. My expectation is that the items we've covered today are going to be the things that show up in those FPICs, but certainly if anything was different, we would need to include that as well in our communication to governance.
Do you foresee anything else
I
at this point in time?
I don't think so. I think our findings kind of address the issues that are going to show out. I expect that there's going to be a FPIC related to general fund balance, related to operating cash flows and the proprietary funds and those types of things. So, but certainly if there is something different, then we would include that in our communication.
Thank you.
Mr. Lyons, you mentioned FDIC, which triggered my memory here. And for the, FY 22, there was one issued for the quick ratio in the water and sewer fund, by improving cash collections. Did that, from your perspective, was it was just showing that we needed to do a better job of collecting, and reducing the operating net loss, because essentially we were charging, not enough for the service. Would that be your recollection on that?
So, the quick ratio, looking at like cash flow as a percentage of operating expenses.
Yeah, it said, in 22 financial audit, we indicated an operating net income loss of 280.
Which fund was that in? Do we know?
Excuse
Do
me?
we know which fund it was in?
I do, I'm just reading you can look at it, I just read the FDIC.
Okay.
And Councilmember Daughtry, I'm not sure if Alderman and Jenkins was our.
We didn't do.
Oh, they
it.
did.
They were.
But you did 20, did you start in 23?
That's
Yeah,
correct.
they started 23.
Okay, and then we had the same thing, but water, and operating and net income loss for water and sewer.
Okay,
And
yeah,
then water and sewer capital asset ratio,
yeah,
operating, net income loss for electric and, material weakness, we had some material, weaknesses, restatement of balances and so forth. My question to you is, that was more of a, we needed to charge more for cost, finish our cost of service analysis and charge more for the, service because we weren't charging enough.
yeah. What that ratio looks at is it takes your operating cash flows, and then because operating cash flows in your financial statement do not take into consideration debt service.
Right,
So it says, okay, whatever your cash flow from operations was,
right.
and then takes debt service out of that. The expectation there is that you are generating enough cash flow from operations to both pay to operate the system
Sure.
and to make your payments. And so anytime that ratio dips into the negative, you have to look at the inputs. The inputs being to operating cash flows, the inputs being the revenue side or the expense side. So it doesn't hone in on, hey, you're
Sure.
not charging enough, but it should. The idea behind that is to trigger, hey, we need to look at this and figure out why this is negative.
And that was so each year they were included and we were working on those, but it was not, they were not complete indicators of where we are in the situation where we are today. It's a combination of that plus many other things. Is that a fair statement?
I think it's a combination of that plus many other things, or it could just be the significant number of years in which we keep having these same indicators. It's,
Right.
We always talk about looking for trends. If the quick ratio slips negative 1 year, no big deal, but if it continues to be negative over and over and over again, eventually you're gonna end in a not good place.
Correct.
So,
Correct. Just wanted to clarify that, get clarification, since we have those three, three altogether.
I have a question regarding another Justin Journal entry as, J number 18. And it's their transfer a portion of installed payments to electric fund incorrectly recorded. And this is for almost $6.6 million. It's actually 6.5, 8692298. What is that for?
Honestly, I'm not sure. I'd have to look.
Okay.
I mean,
It's a transfer to electric lease payment, loan interest payment. It's a big number, almost $6.6 million.
yeah, unfortunately, I'm sorry, I'm not sure. I'd have to go look at the trial balance and see exactly what it was doing. My expectation, again, we had to make a significant number of entries as reflected in our finding related to capital assets and some of those leasing activities to make sure that payments and liabilities and everything was sort of reflected in the right place.
No further questions for, Mr. Lyons. Tim, I do appreciate you coming, and, he has stated that he's willing to come back and do another presentation in some form or fashion once the item is finalized. And if there are no further questions, Tim, thank you for that. Mr. Mayor Pro Tem, unless, Sharon and, Denise are just eagerly waiting, I would recommend that we take a break right before lunch, give everybody an opportunity to kind of get some fresh air or answer emails, and then we'll reconvene right at 1 o'clock after lunch. And lunch is available for everybody in attendance.
Lunch next door, or where?
I think it's box lunches, so I don't know exactly where it's set up, but it's outside, they can pick it up.
Thank you.
And it'll be ready, it's not ready just this second, it'll be ready right a little bit closer to 12, but certain people want to take restroom breaks and may have to do some business from it.
Reset, we didn't want one. That's one. So he's.
We did the lunch and the conversation, Coach Don was the one that was talking about how the trend. It was just wrong. I think it was like. I forget what these guys
Little one-on-one.
Well, actually, I think we're back on.
I know you. Some of
Okay, I appreciate everything, and I'll